Bitcoin, where are we at? Are we going to keep going, or are we going to possibly drop, or are we just going to get a possible pullback before further upside? Let's dive in and have a look where we're at. Okay, so I've been very, very clear that I believe that this is ABC correction. Okay, so I believe that we've had 5 moves down and that we are currently having an ABC. Okay, if we've ended here, or what I personally believe is we possibly still have one more leg up as well. Okay, so you can see here that you've had 1, 2, 3 ABC, 5. Okay, that was an expanded flat. Then you can see here ABC, flat correction. And then now you can see that we've come up for 1, 2, and then wherever we've ended. Okay, I believe this is 3. We're coming back for 4. Then we're going to go for 5. But there is a possibility that that's 3, 4, and 5. What you've got here is a triangle. Okay, and triangles, if you know anything about Elliott wave, triangles can only appear in wave B or wave 4. Okay, so this is either a wave 4, and then that's wave 5, or it's a wave 4. Sorry, that should be there. A wave 4, and that's because there's always one extended wave in Elliott wave, and typically it's wave 3. So here, wave 1, wave 2, and then 1, 2, 3, 4, 5. That's your extended wave 3. We come back for wave 4, and then we go up for wave 5. There's a few reasons why I'm looking at that as well. I'll dive in and show you now. So if you've got wave 1 there, wave 2, and then 1, 2, 3, 4, 5, what you've got from there is if you take it from your wave 1 up to your wave 4, down to your wave thing, you've hit the 0.618, which is a common wave 5 target. Combine wave 1 and wave 3 together. Typically wave 5 will go to 0.618. Very, very often that is the one. So we've hit that and we're starting to pull back. So what I'm looking for now is, as I talked about a few days ago, that we're looking for an ABC correction here. And from that, what I don't want it to do is I don't want it to fall below this kind of zone here. It has to hold this zone here. Okay, I really don't want it to fall below 35, but it definitely can't fall below that 33,700. Okay, because wave 4 of a lower degree can't go into the wave 4. So wave 4 of the high degree can't go into the wave 4 territory of the lower degree. Okay, so it has to pull up somewhere around here before going up. Otherwise, we're in a little bit of trouble. Also, what I'm kind of looking for is when we pull back, are we coming back on lower in volume? Are we going to come back in 3 moves as well? If we come back in 3 waves, corrective on lower in volume. If we come down in 5 moves on increase in sell pressure on high volume, I'll be a bit worried. And what I'll be looking for is to get out on the ABC retrace. So what would that mean is maybe you get something like this down. And then if it does end up doing something like that, there'll be a push down and then you'll get an ABC back, and that's where I will look to exit. But personally, what I believe is that we're having a wave 4 pullback and then we're coming up to here. I'll show you why I'm looking at here. It's a major confluency zone. Okay. First of all, you can see here fib 1 to 1, but I'm going to show you that on the larger scale as well. So I'm constantly getting shit from the crypto bulls because they keep saying, oh man, you've been bearish. Or I'm like, yes, I've been bearish, meaning that this whole thing is corrective. I've been calling it corrective the whole of 2023. I didn't think it was personally probably going to break above here. I thought that that's probably it was going to get distributed. We've come higher. That's okay. Corrective waves can go higher as well. That's why they keep saying, oh, you've been changing your whole thesis. Is that no, hasn't changed because nothing is invalidated yet. It is very, very, very common for every push to get a 1/3, 2/3 retracement. We haven't even hit the fib 618 level. Every single bear market that we've had so far on previous halving cycles, after a push down, it'll come back to the fib 618 before going down again. So we haven't even done that yet. It's just following a very typical cycle. So, you know, it's very, very common for it to come up to this 4850K before rolling over as well. But I'll show you why I'm looking at that zone as well. So looking at our, if you get your channel, okay, we draw our channel up from here, there, you can see that we're in this upwards channel, which again, corrective moves go up in these beautiful channels as well. Okay, so we've got our channel. I've just removed the other stuff to make this clearer. From there, like I said, this is 5 up, ABC, and then now we're going up for what I believe is wave C. Okay, a lot of other people think that it's wave 3, beginning of the bull market. We'll see. So typically, wave C is a fib 1-to-1 from wave A. Okay, so it's the same length as wave A. So if you get your fib extension, go from the bottom to the top, down to the bottom here, and you'll notice that the fib 1-to-1 comes to this date right here. Okay, 48,719 is your fib 1-to-1, which is a perfect C wave. If I was to get my vertical line and actually look at the crossroads from there, you can see the date is around that kind of 5th, 6th, 7th, 8th of Jan, around there. It's probably a little bit more over actually, about there. Okay, about the 7th of Jan is where this will be coming up and hitting that zone. So that is the key zone that I'm looking at right here. That is also where the fib 618 level is here around this 48 to 50K as well. So all the stars are aligning at this area right here around this kind of first week in January. You can see it's the top of the channel. It's the fib 1-to-1. It's the fib retracement 618 zone. Just a massive resistance confluency zone where there'll be an army of bears waiting there. So that's good because we know two things. One, if it rejects here, that's expected because there's bears. But if we punch through, that would actually be very bullish because there is an army of bears waiting there. And if the bulls can defeat that army and get through, then it's showing massive strength. Me, myself, if we get a weekly close above $50,000, it reduces my whole bearish thesis dramatically. Okay, if we can get a weekly close above 50K. Doesn't negate it, but it reduces the chances of it significantly. Right now, everything is plain textbook that this is an ABC corrective wave. Okay, how it works is that's an impulse move. Volume should support the impulse move. That's a corrective move. Volume shouldn't support that corrective move. Let's look at that. Volume. As you can see, volume is supporting the impulse move down. Volume is not supporting the move this way. It's corrective. Okay. On top of that, what we're also starting to get here are signs of bearish divergence. So we're going lower, lower. So from this point here, we're going lower. I mean, higher, 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 lower, lower, lower. So the trend is weakening from this point at 35,000 as well. It is a weak trend. But just like our body can give us signals that it's weakening, it doesn't mean the minute our body gives us a signal that we're weakening that we're going to stop. It can stop. We can keep pushing. We can keep pushing, and we can keep pushing. We need our body to actually stop and turn around for it to actually say, you know what, I'm tired, I'm done. Same thing with this. We need the actual trend to tell us that we're done. So we don't trade a signal. These are signals, weakening signals. We need the actual confirmation that it's changed trend. Okay, what I'm personally looking for is an ABC down to here, then a quick shoot up to here for a wave 5, quick rapid rise, and then around this zone here. Or there is a possibility that we've ended here at the 1.272 as well, but I need more data to know that. So there is a possibility we've topped here, but the odds are that we're coming in here first. But if we start to come down and we break below here, all bets are off and it could already be done. If we do start to come down, a lot of people are saying, oh, we could come down to 30K, stuff like that. We can't actually go past 30,800. Okay, because that is the top of wave 1. 1, 2, 3, 4, 5. Okay, wave 1. If this is wave 2 and this is wave 3, wave 4 cannot enter wave 1 territory unless it's a leading diagonal. And this is not a leading diagonal. Okay, so we can't actually come into that territory. The minute we come into that territory, it is a confirmed ABC and we're coming down much, much lower. Okay, so that is a do or die zone because if you actually look at it here, what else will happen. One, you'll be falling through that major resistance that should be support, and two, you're going to be falling out of the channel. Okay, so that kind of zone there, that $31-ish thousand is a do or die zone. That is also the zone where everyone started to turn bullish. Think about it. That was the point where all of the bulls got super loud. 90% of the bears turned off and went, oh, actually, I'm kind of bullish now. And they all kind of flipped. So if that's the moment where we flipped and everyone went bullish and then we come back and take it out, that is the market telling you that it was a fake out to flip everyone. This is how markets work. They need to reset sentiment. And I said this even live in Sydney. I said the best way to reset sentiment would be to break above these highs, come up. I didn't think it would get this high. I said it would come up to around 36,000, fill that gap, and then it might roll. But similar kind of thing. Come up, fill that last gap, then we got reset sentiment completely. Everyone's going to start raging about it. The thing is, we actually have no gaps to the downside anymore. Let me pull it up. So if you come up here, type in. This was the big gap that I was referring to before, that would come up, break this high, fill that gap. Okay, then I personally thought it was going to reject there, but it didn't. It's still gone. However, it's coming up on a weekend trend. This is the gap I'm talking about that I believe will come down and quickly fill now. Okay, quickly come down, fill that gap, then come up for last wave. We still have gaps down here, massive gap down here, down at $21,000. We also have a gap down here at $9,600. And I've heard people even saying there's ones down at $3,000 or $4,000. I haven't personally looked for them as well, but I've heard there's ones down there as well. But my target is below 10 to fill this gap down here as well. This one, I don't even doubt will get filled at some point. That's kind of like, don't even really question that. That is pretty much 99% chance that'll get filled. This one, still not sure. Okay. So anyone looking to FOMO in things like that, there's a very high probability that that gap there is going to get filled before there's any kind of bull run or at some point again. Okay, so you don't need to get FOMO. There's a high probability that there. Also, from that point, everything here is a weakening trend, complete weak trend, which has shown that this whole thing here has been going up on weakness, which also means that if it's been going up on weakness, it will retrace that weakness back to where it started as well. Okay, if you know what happened there, that was the USDC possible collapse. So everyone started converting the USDC into Bitcoin, started to pump it, and then we've had the Bitcoin narrative, things like that as well. This Bitcoin narrative, everyone's been talking about the fact that, man, it's going to bring in hundreds of billions of dollars. You know, $3 trillion, BlackRock looks after, if, 10% of that comes in, you're going to get $200 or $300 billion. What they don't realize is from these lows right here, we've actually had already $500 billion come in. 500 billion has already come into the market from those lows. Okay. And if you know anything about the news, and as our theory stated, the market discounts everything. If you're aware of the news, it's old news. There is never a time in history where retailers have known the news prior and actually become rich from it. Okay, because if you think about it, all these ETF filings and stuff like that, do you not think that people didn't know about it down here? Do you not think that's why they're going, oh, perfect opportunity, we'll buy up on this fear of FTX collapse, because we know we're going to be piling the halvings around the corner. We know we're going to be filing for ETFs. It's the perfect narrative during the perfect time to get everyone bullish again. Okay. I don't know if you know, but Canada's already got an ETF for Bitcoin and Ethereum. It came out in February 2021. Do you know where that was? Right there. Right there. February 2021, Bitcoin and Ethereum ETF came out. It was the top being distributed on. Tesla came out buying $1 billion worth of Bitcoin. It was the top. It started to get distributed into on that news. Okay, bullish news is actually bearish. Bearish news is bullish. FTX collapse, bullish. ETF, bearish. Okay, you've got to realize this. You've got to realize that this is what they do. The media controls the narrative so that you guys all get wrecked. Okay, don't listen to the media. Don't listen to those YouTubers that have no idea what they're talking about. Play it safe. Okay, and this is the beauty about technical analysis, is you can ride the trend as much as you want. See, people are like, oh, you're a permabear. No, I'm not. I was actually a mega bull this one. Ask anyone that knows me. Couldn't tell them enough to load up on crypto back here. Couldn't tell them enough to exit up here. Okay. Even here on that move there, I talked about the fact that we're bullish and we've turned bullish on this, but it's only going to be an extended bull rally. They were my exact words. Okay. It's gone a bit higher than I expected. I'll admit that. However, the concept is still the same. It is still corrective in my eyes until proven otherwise, which is where we need to get above the highs up here. It's literally textbook going up and lower in volume. It's a 3-wave move right now. Needs to be 5 moves for it to be impulsive. Okay, so just be careful. At the end of the day, we're right in the market structure. It is still high, 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 low. I just want to take a deep dive into this last part now and show you what I'm seeing right now. Let's just unpack the market structure of this move right now. Okay, as you can see from the low, we've had higher high, higher low, 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 higher high, higher low. Okay, what that is telling you is the market is not willing to sell unless it's higher every time, and they're willing to buy higher every time as well. That is bullish. That is bullish market structure. However, what have we got for the first time? They're selling lower for the first time. They haven't sold lower at all this whole move up. Everyone has been higher. The only thing we had was a sideways move here as well, which ended up being an ascending triangle. This is the first time we've had them selling lower. Okay, that is a strike 1. Strike 2 is here on this double top. That old support became now resistance. Okay, strike 2, where they were buying, they're now selling. Strike 3 comes if we break below here. If we break below there, if they're not buying here, if they bought there last time and they're not buying here this time, why? That's the market telling you that's not discount anymore. If it comes through, that's strike 3. Change of market structure for the first time since this bullish move. Okay, however, like I said, it can be just an ABC. We come down and then we come up. It's only if this comes down in 5 moves and we break below this low here that things get nasty. Okay, so no need to freak out yet. I personally think it's just going to be an ABC and then we come up for one last move, but it could be a top. And at the moment, it has changed market. Well, it hasn't actually, sorry. It's changed it on the small time frames here. And we've got a lower high, but if we break below there, which is 40,300, we have changed market structure on the 4-hourly officially. Okay, so just keep an eye on that level, but don't freak out. It could easily just come down, fill that CME gap that I showed you before the next move up. Okay, hope this video helped, guys. Just be careful out there. You know, we're up in kind of euphoria on the stock market and the crypto market at the moment. There is room for still more upside, but it's time to start playing defense, not offense. Okay, you've just got to be careful and just know that when your structure changes on anything you're on, to start locking in your profit. Take care, everyone. If you like the video, please like and subscribe, and let me know what you'd like a video on next. Take care, everyone.